Hi everybody, so this is a quick video just for clarify all the things that we saw on the financial markets, like based on the Boxing Day rally, and also today we got also a massive recovery due to the fact that it's just a quiet on the financial market, and we're doing like a pretty pretty much low point that's based on like the recent collapse that we got, which were probably close to 30%, 25 or 30%. So my name is François. Hope that you're doing very well. It's just a quick video just to let us know, guys, that do not like be trapped by all the things that you saw in the financial market. This is the like a pretty much thing that we used to call for the dead bones cat on the financial market. So it's a pretty frequent. I mean, it's not pretty frequent, but it's not like surprising what the things happen on the financial market, because technically the rebounds has to be is valid, because we pretty much we got a solid downward pressure since the February that I talked you guys about the priced correction, a major correction that we supposed to have, and it has been made, right? We the market have been sell off like too much, and we got probably 25% to 30% if we take a look quickly since the last fall, like between like the September and December, we pretty much have been sell of the market, and we down the 30 or the 25% expected, right? So that's why it's very important to take a look for so far away to see on the long-term vision on the financial market, to not be like surprised and to be trapped. And all the things that are for the based on the volatility is something that we call that for the dead bones cat. Sorry. And then the bones cat, what does that mean exactly? Is it just when the market are going like too much and quickly on the going down, it's probably made some like a kind of massive recovery. It could be sometimes 25 to 30% recover, then he's going again on the back, and that's why we pretty much seen that on the financial market right now. And if you already also see on the long term, it's been like kind of an ascending channel, right? An ascending channel which is made to since like the long bull run, the long on history that we got, which is for 9 years rally, and then it's normal that the market just get rebound to the bottom of the channel, right? But for the upcoming New Year's, which is starting like for the 2019, don't be trapped to like don't put a strategy just to want to buy back, or to buy with the movement, the sell-off movement, because this one has been like made for the pullback until the previous neckline that I draw for you, like face of you on the Dow Jones. We got like the 23,390. This is a neckline that's the market starting to decline after is doing the massive recovery, right? So if you see that, it's just like a deep brief, right? Before that, it will be going to test the neckline and then going to sell off again back, right? So the level here, which is the Trump election, is November 2016. Just remember, when before that, the President Trump coming, the market was just waiting about the fact that he will be make some he will be doing like tax cut, and he will be putting pressure on the dollar to be low, and then to be competitive on the financial markets, and probably exceed the commercial balance faced to the China. And those kind of expectation of the market have been priced to this big movement here, and they bought it until we doing like they're both failing on the top, right? So that's why I would like to tell you that based on that, right, even the Jeopardy internal politics and the geopolitics that I discussed to the weekly market analysis to the last Monday, and also to the freeze investment, which is where plan to put on the Nasdaq, which just freeze because we have a tension, trade war tension between China and United States too, and also we have also like a financing Mexico wall border, which is probably going to shut down the administration on the financial market. So all these parameter on the index right now is just like a bit on suspense. It's not like it will be restarting. So, but it's on suspense because we are in holiday periods. The major economic actor just want to forget just all these bad news for the index. But don't be trapped again. We are definitely in bear market. I can ensure you, definitely I put my hand in the fire. We are in the bear market, okay? It's just a simple a simplistic and statistically movement. When the market going too low, it's normal that the market being rebounds like for 20 or 30% up, and then after come back again, in the same way that the trees do not grow up until the sky. Is exactly the same thing that the tree branches do not also go as well to the roots, right? So it's not like, don't starting to adjust your strategy to buy the market, buy the dip or buy the low. It's normal that the market just rebounds a bit. That's why you call the dead bounce cat, and after that it will be going to sell off directly, right? So if you see here, technically we still on the ascending channel, right? Because make a difference between the bear market and also the recession or financial crisis. Bear market is when the market just going to the major correction, is just doing that each day in a row, and after it's just doing like a massive recovery and then going back, right? So it's just like the fact that the market make in a row a bearish day, right? It do that each time. That's why we call a bear market. But doesn't mean that we are in a recession, or it's we are in a financial crisis. Usually it's begin by bear market. When we go into the recession, it's begin to the bear market. That being said, in the recession we have in bear market, but a bear market is not necessarily mean that we will probably goes to the all the market will be just like going down each day, right? We could get also a recover, and we could also invalidate it also the previous movement if technically we close above the solid threshold which will precede the massive sell-off pressure. Okay, so if you take a look here on the S&P 500, we have a 2610 and the 2530, which is the threshold which were like supported the market, and is not coincidence on that is make the neckline, which where we break it and we close below that, right? So that's why I told you we are just like in 2007 today. It's just like four days left and we'll be on the new year. So no surprise if the market we close below this those two lines here, the market will be continue to drop off, okay, to drop off. But if we close above this those two lines here, and we close above also the 2006-10, no matter what the no matter what how's the the movement or the volatility on the recover will be probably gets something like on the bull, a bull movement upcoming to the 2019. But for me, I'm not be trapped. I'm very lucid, and it's very clear in my head that we are in bear market. So that being said, the scenario that I am expecting is just the market recover a bit, close above here, and on the new year we're doing just a trap. I will show you what will be my scenario here personally. So if we close here, for example, and we just going like this, right? We're just going like this. Let me adjust that. Okay, so we're going like this just to make people hope that we starting to accelerate again. And when you get starting to buy this movement, and then the market will be again sell off again, because those level is pretty much solid and we break it. Take a look on the monthly. We are on monthly analysis right now, so each shock and macroeconomic event are already included to this candle. So that being said, it's very important to make sure that you won't be trapped on this phenomenal recover that we got yesterday. We got in probably close to 4%, and today we got also close to 3%, right? So in just 2 days we recover for 7%. So that being is a very crazy, but technically is not surprised, because when we draw the ascending channel based on the long bull run for 9 years, it was not surprised that we rebounds on the bottom of the on the support, right? We buy support and we sell resistance. This is basically rules on the technical analysis, and this is what we saw here, right? Each low on this ascending channel or oblique support here has been made paid, right? Has been paid off here. We paid here, we paid here, we paid here, and then they paid here again. So no surprise again, right? If you take a look for the long term, it will save your capital. So don't be trapped. Hope that this video will make a clarification on the what happened in the financial market. So technically, based on the long-term bull run, we are bullish. That not being said that you have to buy this bear market. We have a bear market now. We have a correction, and we did pretty much the severe correction from here to here, which is like a 30% way far. And then we get starting now to do a recover to a brief, and then after that, if we close below those two lines here, and then we'll be starting now to prepare probably the recession upcoming, right? And will be exactly the same. Is a pretty much the same scenario will be translated to the from the S&P to the Dow Jones, and probably get to the tested the level on the Trump election, which were 18,000 here, right? And the signal will be given by the 20,000 level here, right? If we break at this level, then we'll be fall off, and then we can starting to talk for recession. Thank you so much for watching this video. It was François for GST Canada, and we talk to you soon and around for the next video. Bye bye.